It is getting messy out there in the semiconductor industry. As expected, it looks like most chip companies, especially those directly tied to consumer electronics markets, are starting to bottom. We got the reports from AMD and Intel this past week that continued to confirm that a second half 2023 rebound is shaping up. But then there's Qualcomm, which I think is really important we talk about because we just said a couple of weeks ago why Qualcomm is one of our top, not just top chip stocks, but top stocks to buy right now, period. Let's talk about what happened in Qualcomm's last quarter, calendar year, first quarter 2023. Let's add some color to what they said. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. I want to start first with just a general overview of revenue, sharing the revenue segment from the KPIs from our friends over at Main Street Data. You can see here the revenue trend for Qualcomm equipment and services, the dark blue line. Basically, that's Qualcomm CDMA technologies or their QCT segment. Basically, think of that as the sale of chips. And then the lighter blue, their licensing revenue, QTL. You can see the year-over-year decline again here in the first quarter of 2023, which is the fiscal second quarter of 2023 for Qualcomm, but Q1 in the calendar year. More year-over-year declines, but I think the upshot here is that you can see Qualcomm still holding on to all of their pandemic gains at this point. I think that is the big piece of good news here. That's the silver lining if you're looking for one in these reports. Now, I'm going to go back to Main Street data here in just a moment, but first, just to further understand what's going on at Qualcomm here, specifically that QCT segment, the biggest revenue generator. As expected, handsets or smartphones are what are dragging down results. That is the biggest driver of revenue, both at QCT, but also in QTL, the licensing revenue. Whenever a smartphone is sold, Qualcomm gets some royalty revenues, again, because they helped pioneer wireless communications technology back in the 80s. This is basically a monopoly business on that. But specifically on the chip sales, handsets down big year over year again, down 17%. IoT, some similar trends there going on. Qualcomm lumps all sorts of consumer electronics into IoT. It could be laptops. They do have some exposure there in tablets. They're doing work in the laptop department, which we've discussed in previous videos. And that is a long-term growth business and an important way Qualcomm can diversify. But nevertheless, both of those segments down year over year. Automotive, the very, very small segment that nevertheless continues to grow, helping offset some of this pain elsewhere. So that's broadly what we're looking at here with Qualcomm, following the general trend as smartphone and PC sales continue their really, really ugly decline off of the work from home spending spree that we were all on in 2020, 2021, and halfway through 2022. Now, I'm going to continue referring to this revenue stream breakdown for Qualcomm while I read off some of the guidance for the next quarter, basically April through June 2023, some of the financial outlook provided by CFO Akash Palkawala on the earnings call. He said on a sequential basis, Android handsets and automotive revenues will be roughly flat with where they are right here that you see in this chart. and mid-single digit growth in IoT. So that is the good news. It looks like perhaps many of Qualcomm's revenue streams are starting to bottom. We're reaching the bottom. That is roughly in line with where other chip companies, again, like Intel and AMD, have sort of guided us for the next quarter and beyond. Things are starting to bottom. So again, just to reiterate, handset and automotive on a sequential quarterly basis remaining flat. So we should expect to see roughly 6.1 billion in handsets, 450 million roughly in automotive, and then maybe a mid-single digit increase in IoT. So maybe 1.5 billion, 1.6 billion in revenue in the next quarter. Okay, so with that QCT revenue guidance in mind, let's take a look at last year's fiscal third quarter. So now remember, Qualcomm kind of chopped up that RF front end revenue segment and distributed it to the remaining three reporting segments: handsets, auto, and IoT. Most of RF front end goes into the handsets or smartphone division. So let's just call handsets revenue a year ago at $7.1 billion. So there's going to be another very, very significant year over year decline. If handset revenue is again 6.1 billion in Q3 fiscal 2023, that's going to equate to roughly a 1 billion year over year reduction. So I'm looking at 16, 17%, maybe as much as 20% year over year decline in smartphone chip sales in the next quarter. The good news is automotive, if they do haul in about 450 million in Q3, that's still a very large year over year increase from where they were last year, as you can see from this chart from a year ago. And then also IoT starting to creep up again. If they do 1.5, 1.6 billion in revenue, it won't be as significant a year over year decline as what they just reported. So this is what's going on. It looks like Qualcomm is finding a bottom. So that all sounds well and good, but here's the real stinger from Qualcomm's conference call. Basically, while a lot of other companies with exposure to consumer electronics are forecasting a gradual recovery in sales the second half of 2023, calendar year 2023, Qualcomm basically removed that language from their guidance. They have limited visibility on what demand will be the second half of the year. Basically, especially in China, there were way too many smartphones sold. There's still excess inventory out there, and therefore their partners, smartphone manufacturers, are still working through that excess inventory. So right here, I am going to pause and reference the last video where we talked about Qualcomm. Specifically, I talked about the elevated inventory the company is carrying on its balance sheet, and basically what this means with the rebound seemingly on hold, on delay at Qualcomm. It looks like maybe that elevated inventory, it ended the last quarter at about 6.8 billion, down very slightly from the previous quarter, but it looks like there is going to be a bit of a delay in selling off that inventory and basically monetizing it at Qualcomm. So what I thought a back half 2023 rebound in revenue for Qualcomm and especially profitability for Qualcomm, maybe it's getting pushed out into fiscal 2024. Now, here's the part of my buy thesis that is playing out correctly. Even in the midst of a really, really nasty downturn, Qualcomm remains highly profitable. They are still converting the majority of their operating income into free cash flow. And that happened again in the first quarter of 2023, calendar year 2023. In fact, even with revenue dipping significantly, free cash flow was basically flat with where it was last year. They still converted most of their operating income to free cash flow. And so, even as revenue declines, profits remain stable. And of course, what that means for us as shareholders is that dividend payment continues to get doled out every quarter. It continues to grow every year on a steady basis, and buybacks, stock buybacks can continue. In fact, 100% of free cash flow was returned to shareholders this past quarter. Of the 3.7 billion in free cash flow generated in Q1 or fiscal Q2 2023, almost 1.7 billion was paid out in dividend. So current annualized yield of 2.8%, share repurchases of almost $2.2 billion just in the last quarter alone. Now, that being said, the smartphone industry is no longer a high growth business anymore. Qualcomm has acknowledged this in the past. Its core business in QCT, handsets, smartphones, no longer going to provide a massive growth tailwind going forward, especially with at some point Apple revenue completely disappearing as Apple continues to invest in development of its own modem for its iPhones. But Qualcomm is working on some new tech that it talked about. Of course, AI, generative AI in particular, all the rage right now. Qualcomm did demonstrate stable diffusion running on an Android phone earlier this year. So basically, pulling generative AI out of the data center and running it natively on device at the network edge. That could be a big deal going forward for Qualcomm if they can demonstrate their ability to increase performance of generative AI services by bringing it directly onto our phones. And so they are continuing to invest in their technology around handsets, given this potential growth driver in their primary uh, revenue line. But of course, diversification is still the name of the game here. That automotive segment is still the main growth driver and will continue to be. Remember, they finished the acquisition of the Arriver software business last year that's now part of QCT Automotive. A lot of new work going in to connect the modern vehicle to mobile networks, to increase the computing power, both within the cabin and in advanced driver assist systems. Interestingly, CEO Cristiano Amon, when asked this on the earnings call, did confirm that they are still looking at a couple more potential acquisition targets to accelerate their growth in automotive. If you're looking for a new growth driver for Qualcomm in the immediate term, this is where we should be excited. QCT Automotive. And then perhaps later in the year, the one segment that does look like it is rebounding, bottoming, and potentially rebounding as early as next quarter is IoT, including industrial IoT. And of course, also the laptops, the partnership with Microsoft, working on some processors to kind of come up with an answer to those Apple M series chips that everybody loves. But IoT, industrial IoT, laptops, and the like, still a lot of potential here, even though they did report year over year declines in the last quarter. This is still also a growth segment and an important way Qualcomm can diversify its business. So in conversations I've had with CFO Akash Palkawala in the past, what's really important about these segments is not just the growth it's providing for Qualcomm, but many of the chips that they're designing for automotive, for IoT, and such actually carry even higher profit margins than some of their more legacy products in handsets. So the good news here for Qualcomm even if this is a slower growth company over the long term, a slower growth company than it has been the last 3 years during the initial wave of 5G upgrades, and of course the work from home consumer electronics purchasing boom. Even if it's a lower growth business going forward over the long term, I think there is still potential for this one to generate higher profit margins, generate higher free cash flow, and continue to increase the dividend and share buyback program. Management has indeed continued to stick to its outlook for low teens growth, uh, gradual profit margin expansion. So at this particular juncture, I still think this stock is very cheap. As we predicted here, based on our analysis last quarter, we said that the price to earnings ratio would deteriorate as this year progresses. That has happened. What was once a single digit trailing 12-month PE ratio is now a low teens PE ratio. Qualcomm stock currently, as I record this, at about 11 times trailing 12-month price to earnings. So that metric is deteriorating, but still quite cheap coming off of that very, very low base. And then on a free cash flow basis, that's actually holding steady. Again, like I mentioned, revenue in decline, but free cash flow remaining stable. We predicted as this year progressed, we could see a spike in free cash flow. So Qualcomm stock trading at 16 times trailing 12-month free cash flow. Again, if the company eventually, maybe, perhaps next year in 2024, starts to notch a more meaningful rebound in their business and profitability starts to grow on a year-over-year basis again, I still think the stock is quite attractive at these levels. Of course, you get the nearly 3% a year dividend yield and stock buybacks. Company returning all of that free cash flow to us shareholders. What's left over after the dividend typically gets dumped into share repurchases to reduce share count and increase your slice of the Qualcomm earnings pie. But I'll admit it was an ugly quarter, uh, as expected, an ugly quarter. But that outlook for the next 2 quarters or so, the remainder of Qualcomm's fiscal 2023, not shaping up the way we had expected it would. Maybe they'll surprise us. Maybe they'll get some more insight into inventories out there. Maybe the China smartphone sales rebound will pick up some steam in the coming quarters. But at this particular juncture, it doesn't look like we're going to see meaningful sequential growth for Qualcomm for the next 2 quarters. So I hate to leave you on a sour note here, but I think that is the main takeaway from this last earnings call. Great company to own for the long term, but we still have some bumpy roads ahead for the next 2 quarters. Stay tuned, folks. We're still playing catch up here on earnings. Next week, we are taking a look at Albemarle. We have some chip industry adjacent companies. Just a teaser for you. You've perhaps seen our articles drop on Air Products, on Linde. We're going to finally do some videos on some of those adjacent industries, basically suppliers to the semiconductor industry. Stay tuned for that. Have a good weekend, everyone. Take care.